Hello to all traders and welcome back to another market review brought to you by Orbex. So we're kicking off this week's trading news with looking at gold and the US dollar after the last few sessions. It's been quite subdued, especially gold after dropping a lot of pace off of its $2,000 handle, now trading roughly about 1980. We're seeing this 20 to 30 drop in the last few sessions really show signs of firm resistance at the $2,000 level. The dollar, on the other hand, has been quite subdued as well. We're having some hawkish content coming out of the next Fed's meeting, which is on the 3rd of May, so only a couple of weeks away. What is that going to do for the next round of volatility, especially when the Fed says it's going to still raise its rates by 25 basis points, but with the news coming in of the jobs number, of the inflation rates slowly stabilizing now, will we see more of a push for interest rates to keep going higher? We'll have to wait and see. But gold, on the other hand, has been something to watch. As I said, looking likely now that we're on a downturn, especially with the bearish divergences that we've been seeing in the last few trading sessions. We'll look on the charts shortly, but we're just waiting to see the next signal. As I said, gold is such a good, strong commodity for a lot of opportunities in the market. So we'll just kick off with that first of all today. So as I said, we've had this upsurge and this double top roughly about 2046, 2047, but since then we've seen a $50 to $60 drop to the downside, and this is on the daily chart. Just pull it on the screen so it's a little bit easy to see. But now we're just seeing what is evidently clear, that there's a slight bearish divergence forming, and this could pull prices lower in the near term, which it has been doing recently. So as I said, from 2040 going down to 1980, roughly about a $50 to $60 drop there. So we're going to see now this could have a little bit of a plateau before we could have another leg lower to the downside. We're seeing that this bullish run is pretty much coming to an end now, and we could start falling out of this bullish channel and start moving to the downside as well. As I said, especially with this bearish divergence being noted on the RSI and the other stochastics as well. But if we look on the 4-hour chart, most interestingly enough is that we're getting more of a signal that we could enter a quite big consolidation period here. And what we're doing now, as you can see here, very, very choppy, finding firm support and resistance. So what could happen in the near term is that we could stick in this channel for a little bit longer before we get this breakout in price action. So it could have another, maybe say $5-10 move to the upside before we get another signal to start moving back down to 1980, 1977 region. So this is very, very important because it gives us the next direction for gold. And we've got GDP and PCE data this week coming out of America. So this could really, really affect the likelihood of, well, the path of where gold is going next, as well as the US dollar. So very, very interesting times, and obviously good opportunity times as well if we keep an eye on the patterns and obviously the fundamentals that are coming out of the calendar as well. If we look on the daily chart for the dollar, I noted a few weeks ago that we were immersed in this bearish channel for the dollar, and now we're just seeing signs that it could just be breaking out to the upside, especially with gold sinking quite vastly in the last few trading sessions. But as I said, we are still in this move to the downside. The only thing I've noted here is a possible firm support roughly just above the $100 area, which could give the impetus that the dollar is not ready to fall through the $100 barrier just yet. It still has a little bit more to climb in that scenario. So with that being said, this could affect all the dollar pairs, euro dollar, pound dollar, dollar yen, all the big players in the market, which could have a slight push on the US dollar, a slight advantage on that. So just keep an eye on the FX pairs as well. Just bring this down to the 4-hour chart as we usually do, and as I said, this top barrier here of this bearish channel is just being tested once again. So I'm just going to wait to see if we do get a confirmation and a clear break. If it's not a false break to the upside here. Excuse me. And we'll just see if that's going to have any bearing on moving higher in the near term as well. So obviously the dollar index does track quite a few of the currencies as well. That's why it's important to have a look on it. And also just keep an eye on earnings seasons as well, because as we saw last week with Tesla and Netflix and some other big corporations, they are just missing the earnings, and also the outlook for the rest of the 3 months as well, which is quite important. So this is actually affecting the dollar quite significantly as well. This is why we haven't really seen too much of an upsurge on the dollar, even though gold has fallen $50-$60 in the past few sessions. It's very, very consolidated at the moment. So earnings season is something to look at as well. So let's take a look at what's in store for the markets for the rest of the week. Join me again next time and we'll go through everything. So thank you very much for joining me and have a great day ahead. Bye for now.